Hey, everybody, it's Nicole Benjamin, your host here at Seeking Alpha, to bring to you another episode of the Weekly Grade with Stephen Cress. And we're bringing to you market insights in minutes. Now, for today's episode, I want to introduce none other than Stephen Cress himself, VP of Quantitative Strategy here at Seeking Alpha. He is the wonderful guy behind a lot of the amazing portfolios that you see on site, our Alpha Picks portfolio, our Pro Quant portfolio, and our newest Quant Growth and Income portfolio. So if any of that might interest you, please take a look and go ahead, click the follow button on his page so you can keep up with all the amazing things he has going on. But Stephen Cress, thank you so much for joining us.
Thank you so much for organizing it. I really appreciate it.
Absolutely. Now, I want to jump right in. I'm looking here and I see that you've highlighted a lot of the market volatility that is, just being driven by shifting interest rates and just expectations that, are tied to the tech sector's pullbacks. So, with that sentiment flipping so quickly, how should investors really be looking to find that stability and those opportunities for this second half of the year?
Well, I think diversification is really important. It helps to minimize risk and maximize returns. And one of the stocks that I wanted to highlight was Allstate Financial, which is a quant strong buy. Many people are familiar with this company. They provide all different types of insurance, from property and casualty to auto insurance. You've probably seen a lot of their commercials on TV. And being that there are a lot of things happening with geopolitical events, with inflation being much stickier than expected, with interest rates rising this year, which we went back a year ago, people actually thought interest rates would be cut by the Fed. And now interest rate traders are actually looking for increases in rates. And the nice thing about Allstate is, despite all the news that's happened with war with Iran, with tariffs, with interest rates, and a lot of volatility this year, the stock is actually up about 20% year to date. There was, if anybody recalls who's watching, you may be aware that I was one of my top 10 picks for 2026, and it certainly has not disappointed. It is significantly outperforming the market, which is quite nice. S&P 500 up about 8 or 9% right now. Allstate up about 20%. And one of the nice things about Allstate is it has a very steady business. Uh, it is not a consumer discretionary type of business. It is a business where people need to have insurance, whether it's auto insurance or life insurance or property and casualty insurance. They need to have it. There's not a discretionary aspect to it. So their business is very steady. And even if interest rates are climbing, they have proven in the past that they have the ability to really adjust their premiums. And in the same token, when interest rates are rising, they can actually invest in higher paying securities, being bonds and also government bonds as well, which they often invest in. And the higher yields benefit the company. So we really believe if volatility continues in the second half of the year, it should do well. But it's actually done well, even with the boom that we've seen in the AI stocks, which have rallied so hard in the first half of the year. And the technology sector has been the leading sector. Financials has not been the leading sector, but Allstate has performed very well, irregardless of what the other financials have done.
Well, to follow up with that, because you gave Allstate this strong buy, I want to ask, with the ongoing macro headwinds and everything else going on, like you said, geopolitically, how does this pick prove that Allstate's business model and just their long-term returns are actually a strong hedge against inflation?
Yeah, so just for a couple of the reasons that I mentioned, with their ability to adjust premiums and actually be a benefactor of rates going higher in terms of their investment portfolio, they actually do fairly well in an inflationary environment. And I think the stock has certainly proved that. As I mentioned, back in January, we had a strong buy. There was volatility right after the market and the stock did come down. It went to a hold and it stayed a hold, but even as a hold, that's not a sell. That means hold. And the stock did appreciate. And not too long ago, it actually went back to strong buy, and the stock had a really good rally. And I think its earnings and its revenue have shown resiliency recently and historically during inflationary oriented events. So I think we should see some stability out of this stock, a good place to rotate assets into, but not only stability, will probably have capital appreciation as well. Hence the quant strong buy.
Oh. Now, before we get out of here, I want to talk about Alpha Picks, the Pro Quant portfolio, the S&P 500. As we all know, and for those of you that are listening and who don't know, the Alpha Picks and Pro Quant portfolio are continuing to beat the S&P 500. So, Stephen, what core fundamental criteria is ensuring that these portfolios in particular are staying ahead of the curve and, are okay with these market dynamics shifting?
Yeah. The common thread with both of these portfolios is that we look for stocks with strong fundamentals, but that is in relation to the data that we see coming out of the companies and data in respect to financial metrics. So, what we try to identify, our strategy is really along the lines of a GARP strategy, which is growth at a reasonable price plus. And that plus aspect, when they combine it all together, we're looking for growth, value, profitability, positive EPS revisions, and strong momentum. And all of those characteristics we're looking relative to each company's sector, not in absolute terms. So when we assess it from a quantitative standpoint and we add the power of computer processing, which allows us to look at thousands and thousands of stocks every single day, we're able to basically separate the strong companies from the weak companies when we look at those financial metrics. And with our products, we try to identify the best quant strong buys. Alpha Picks is meant for individuals that want capital appreciation, but are just looking for maybe two ideas a month. The Pro Quant portfolio, uh, same characteristics as Alpha Picks in terms of what we look for in terms of a stock's factors. However, we provide a higher frequency of ideas. So that rebalances on a weekly basis. And typically there'll be 2 to 3 ideas a week, where with Alpha Picks, it's about 2 ideas a month. And both portfolios, as you can see from Alpha Picks, its year to date performance up 41%. And the 1 year performance that you can see on the left hand side is up 85%. Pro Comp portfolio equally doing as well.
Well, I think we'll wrap things up there. Thank you so much, Stephen, for joining us today. And for everybody that's listening in, go take a look at AlphaPix, go take a look at the ProQuant portfolio, and click the follow button on Stephen's page and go check out his latest article on Allstate. And we'll catch you here next time. And just for some quick housekeeping, past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Thank you so much, and we'll see you next time.
Thank you.